Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we are going to be having a very interesting session. So we'll be trying to understand what has been happening in the markets over the week, what we will be expecting to be happening later in the markets, and of course tomorrow. And we'll try to project on the trends that may appear in the following week. So evening, Ronald, and hello, Lemuel. Thank you for joining the session. I appreciate having you in this session every time. So evening, Halil, assuming that's the correct pronunciation. Hi, Levin. So let's get things started. So we already know that the key market events has been two major conferences happening this week. So quite a coincidence because one is happening from the west and the other is happening from the east. So the first incident or event that the world was majorly focused on is looking to end today, which is basically the BRICS summit. So it was the 15th summit, which was held in Johannesburg, South Africa. And in this event, we were looking at cooperation between the BRICS countries and, of course, African economies. And on top of that, we also saw a key theme appearing in the presentations in the BRICS summit, where a majority of these economies were looking to de-dollarize. So they're not looking to immediately shift to a different currency, as we have been seeing on speculation, people saying that the BRICS countries will come up with their own currency. They are way far away from that. However, they are looking to achieve more bilateral agreements within themselves, where, say, a country like Brazil would be able to trade freely with India without involving the dollar. So those are some of the key developments. So on top of that, we saw the BRICS economies opening up its doors for more countries. And among the countries that were included, or basically given the chance to join the BRICS economic bloc, were the UAE, we saw Saudi Arabia, we saw Iran, we saw Egypt and Ethiopia in Africa, and of course, we also saw Argentina. So when and if these countries basically confirm that they are joining the BRICS economic bloc, then the BRICS economic bloc will basically be controlling about 60% of the oil supply, and this is expected to have some far-reaching effects on the oil markets. So besides this, today, the Jackson Hole Symposium has been officially kicked off. We are not seeing much of news from the first day of the Jackson Hole Symposium. So majority of the volatility is expected to come from two key speeches that are set for tomorrow. And this is a speech by Fed Chair Jerome Powell, and of course, another speech by the ECB chairperson, Christine Lagarde. So those are the two key events to watch this week, and that is tomorrow. And they have the potential to rumble the markets and cause increased volatility. So besides that, we know that the US has entered the campaign period. So we know that the elections in the US are set for November next year, but the campaign periods are starting officially this week. So just yesterday, we had the Republican debate where the key presidential candidates were having a debate on TV. And of course, the leading Republican, being the former US President Donald Trump, decided to skip the debate, and instead, he decided to do an interview with Tucker Carlson. This was at 4 a.m. Today in the morning. And this was later published on X, or basically Twitter. So that's what a lot of investors have been following. So I'm seeing a lot of comments here. So quite a good number of people have already joined. Hello, Ruben and Marcy. You can see Brian, Tony Dark, welcome. Humphrey, Susan, Said, welcome guys. J-Squad, thank you for joining the session. So let's keep going. So next in line to those key economic events that have been happening today, We also had our own set of events happening in the economic calendar. So I'll be starting with the key events on Monday through to today. So China cutting interest rates for that time this year was big news, as the Chinese economy continues to slow down and inflation turns negative, basically implying that China is now in deflation. So inflation in Japan skyrocketing to 3.3%. And this is still significantly higher than the BOJ target of 2%. So this is basically increasing pressure on the Bank of Japan to consider tightening policy. So then further down the week, we had the Richmond Manufacturing Index coming in at -7, a slight improvement, but still within contraction territory. Existing home sales are slowing down to 4.07 million, following higher than expected mortgage rates that have exceeded 7.5%. The housing sector in the US is becoming a crisis, where a lot of new home buyers are finding it unaffordable to basically buy new homes. And of course, for people who locked in mortgages at 2%, unwilling to let go. So supply is also a problem for housing in the US. So we didn't have much impact from the speeches by Goolsbee and Bauman. Then we had the flash manufacturing indices. So these ones were quite violent on the markets, where we saw Australia coming in at 49.4, still below 50.0, basically indicating contraction. Services also worsened to 46.7. For Japan, we had 49.7, a slight improvement, but still within contraction. Germany was the key highlight, with services jumping into contraction at 47.3 and manufacturing remaining in a recession at 39.1. So overall, for the Eurozone, we saw a slight improvement in manufacturing to 43.7, but services dived right back into contraction territory at 48.3. So for the UK, we saw manufacturing PMI slowing down 42.5, flash services to 48.7. So for Canada, we had retail sales data, which came in at negative 0.8%, meaning that there is a weakening Canadian consumer. That is for core retail sales, and for retail sales, it remained level at 0.1%. So the major key event yesterday was a flash manufacturing PMI for the US, which slowed down to 47.0, leading to a strong rally in equities. Flash services also weakened, which are both consistent with what the Fed is looking to achieve. So the Fed has been looking to slow down the economy, and this basically implies slowing down both manufacturing and services. So this was taken as positive, and with the Fed not threatening to go for that for other rate hikes, then this led to a strength in US equities market and a weakening of the dollar. So we had the consumer confidence survey showing that the confidence is getting lower in the Eurozone. So new home sales at 714K, a slight improvement. And then crude oil inventories came in at negative 6.1, meaning that crude oil stocks are basically getting worse. And as a result, with a tighter supply, you see higher prices in oil. So today we didn't have a lot of news happening in the markets. So the major key event for the day was the unemployment claims. So unemployment claims came in at 230K, which was way lower than the expected 239 and lower than the previous reading of 240K. So this is the second consecutive week that unemployment claims are slowing down. And when there's less people claiming for unemployment insurance, it basically means that the job market is pretty much healthy. So it's a key job market indicator in the US. So if people are not filing for unemployment claims, then it basically means that they have jobs. And as a result of that, what we continue seeing is a tighter labor market, which is inconsistent with the Fed policy. So what the Fed is looking to achieve is higher unemployment claims, more people being jobless. And in that case, it would lead to lower inflationary pressure. However, if everyone has a job and their wages continue increasing, then this money will find itself in the economy, which will lead to higher inflation. So this was quite a big surprise in the markets. So looking at how the markets have reacted, I'll be starting with the dollar index. So the dollar index, which was basically very strong yesterday, later dived in the afternoon, especially with the anticipation of the NVIDIA earnings, which happened at 11 p.m. So also the announcement of home sales data has had something to do with this. Then today you can see the dollar index resumed strength and has been consistently gaining all day. So this gain can be largely attributed to the belief that the Fed will continue tightening policy following key economic data, and the most recent one being unemployment claims, which has basically pushed the dollar index even higher. So following this big U-turn in the dollar index, it has also happened with major currencies where the pound had found support yesterday, rallied up, and now you can see it has erased all those gains. So clearly a very strong bearish market for the pound. It's the same thing for the euro, consistently moving down. And for the JPY, it's the other way around. So market that was literally going back down is now recovering. And now what we are seeing here is a continued strength of the dollar against the Japanese yen, looking to retest the previous high of 146.5. So for USD CAD, we had a strong rally, which was rejected, but it seems to be persisting to move in the same direction. And then for gold, we had a strong momentum following fears of increased tensions yesterday, especially after we saw the the Russian jet being shot down. So we all know the Wagner Group leader, Prigozhin, was shot down yesterday. So two planes basically went down yesterday. So the first one completely crashed and burned down. We don't have much data about the second one. And there's a very strong belief that the Wagner Group leader, Prigozhin, is dead. So as a result of that, markets did not know how things would turn out after that death. So we don't know whether the Wagner Group will be looking to retaliate or what proceedings will happen after that. So in a bid to look for safety, we had a very big jump in gold prices. And today they have continued to push even higher after pulling back down, then seeing the data from the from the jobless claims, we saw gold making another big jump towards 1920. And personally, I think there's more room for gold. So from the forward chart, this is how it looks like. So after enduring 4 straight weeks of gold, actually 5 straight weeks of gold losing, this week has been extremely bullish for gold, and perhaps we'll be seeing some further upside as we look to end the week. So the most volatility has been happening in US equities, notably the NASDAQ. So we know that last night we were expecting NVIDIA earnings, and they came in way better and stronger than expected. So NVIDIA is now making more money from software than hardware, and it's basically turning into a software company, and it revised its earnings higher. And at the same time, it basically announced another $15 billion stock buyback. So as a result of that, there was increased speculation that the rally would continue. But in this case, as I had said earlier in the week, we normally anticipate that when there's a lot of speculation on strong earnings on a big company like NVIDIA, the most common reaction we normally see in the market is people buying the rumor and selling the news. So there was a lot of people buying the rumor, basically front running the demand for NVIDIA shares. And once the announcement was made, there was a big spike higher, but then today we have seen NVIDIA erasing the gains. So I will check this right away. So this is NVIDIA. Let me try and open the chart. So yes, it was announced here right after market close. So market jumped higher. So the opening was way higher. But then immediately after the market opened, you can see prices were moving back downwards. So for a smaller time frame, you can see the big jump, market putting back down, and now it's regaining strength, but still trading below the $500 price level that was being a target here. You can see the big high price was 496 at market open. So this is basically a bearish momentum after the market open. So what we are seeing with US equity indices, they were pretty strong for the last, I would say, 3 days. But then today we have seen a very strong bearish momentum, basically following people taking profits on NVIDIA as well as other tech companies. And on top of that, we're also seeing increased bets that the Fed may go for another rate hike. And of course, as I've mentioned, the key market event is the speech by Jerome Powell on the Jackson Hole Symposium tomorrow. So it has been the same thing. We've seen the big spike happen with the Dow Jones, followed by an immediate reversal, and the market is looking now to break this support level. So if this support level is broken, you can clearly tell that this was a major liquidity grab around here. So anyone who was shorting on this day and their stop losses were just around this area, they have been triggered, and that volume has fueled the momentum further back downwards. So from the forward chart, this is how it looks. And it's basically one of the strongest bearish candlesticks that you will find in the markets. So this is usually a very strong bearish candlestick because it shows an attempt to move higher, which was met by a very strong reversal, sellers entering. And at the end of the 4 hours, there was a strong win by sellers, and now there's a strong possibility for this momentum downwards to continue. So the market is already breaking that. So you can see right here. So if I go to the forward chart, you can see we're already breaking the previous lows. So now it seems like a completely bearish week for the NASDAQ, and I think this is where the opportunity lies. So for the S&P 500, it's the same thing. So after a very strong rally, now we are looking to erase all the gains for the week. So there's an opportunity that the S&P 500 may continue selling for the rest of the week. So if you look at the major trend line here, I think this has already been broken. So there's a good chance we'll be seeing some further downside. So for US Tech 100, or basically the NASDAQ, what we are seeing is a chart that I've been sharing with you guys, where the market has been maintaining this area as a good support, where every time the market gets the trend line, there was a good buying opportunity. But now at this point, we had a good buy. And good buy basically implies that those opportunities are not there anymore. The sentiment is changing into bearish momentum. So following that, what we are seeing here is a market forming 3 consecutive bearish momentum. This week, running the first 3 days with a strong bullish momentum. And now on the 4th day, you can see we are erasing a lot of candlesticks within one candlestick. So 1 4 candlestick has basically erased the price action of 3 candlesticks, basically implying that there is a very strong entry of sellers in this market. So from the 1 hour time frame, this is how it looks like. And from the 4 hour time frame, you can see that this particular momentum here was more of a retest of the breaking point. So if you look at the point at which the market broke this trend line right here, the market continued moving further back downwards for 2 weeks. Then on the 3rd week, went back up, retested the breaking point, and now it basically signals some further momentum downside. So I think the real opportunity for the NASDAQ is that the market continues moving back downwards and gets right back into this structure. So I could be wrong, the market could go back up, but chances are the correction has started. So we are experiencing this behavior where, let's say your target for the S&P 500, the NASDAQ, or let's say your particular collection of shares was to make, let's say, 20 or 30% by the end of the year. So if the market gives you that within a shorter period, we are already in August and a lot of investors have already achieved their targets. So in order to maintain your position and remove the risks on your portfolio, so some investors are rotating, basically selling their equities at a good profit and then putting that money in short-term equities. So if there's 4 months to the end of the year, some investors are choosing to go for 3-month treasuries that are basically yielding around 5% and higher, as well as 6-month treasuries. So in this case, if you have your earnings and you have a risk-free 5% for a period of 6 months, of course, that would mean 2.5% return, but then that compounds your return, and you're guaranteed that at the end of the year, you will have a bumper year. So that's what we are currently seeing, and I think we will be seeing some further downside happening here. So with that in mind, for UK oil or Brent oil, we have seen a very strong support happening at $82.25 per barrel, and this is this week's price action. So yesterday, prices were strongly moving down after breaking this particular trend line. We can see the big candlestick that shot downwards, and then it was immediately rejected and closed just above $82.25 per barrel. So this is the strong candlestick. And then the following momentum was upwards before the market erased some gains. So today, notice how early in the morning, we had this rejection here, and then later here. And then in the afternoon, another big spike that basically grabbed some liquidity here. So with this happening, you can see that there is a very strong support for oil prices just around 82.25 and below. So anytime you're seeing price moving down this way, it's met by a very strong bullish momentum. So from the 4-hour chart, this is how it looks like. It's also another very bullish candlestick on the 4-hour. The market went down, was unable to break, and now you can see this momentum coming in and price crossing higher than the open. And of course, the body completely covering the previous body, indicating that now we are facing bullish momentum in Brent oil. So I expect that Brent crude oil prices could continue riding for the day, perhaps get to 83.388. So that's the expectation for Brent oil prices. And of course, there's more room for upside momentum. So if I clean my chart yet again, and then I zoom out here, you can see that there's an existing trend line running from the previous high. So the trend line seems to be taking this direction here. So if this is anything to go by, then at least we could be looking at prices retesting this area here, which was acting as support. It was the resistance yesterday, and the market could rally here towards the end of the week and potentially even higher to around $84.4 per barrel. So at the same time, you can see that this area was acting as support. And if you connect with this area and then extrapolate, then you can understand why there's a strong rejection along this area combined with this previous low price here. So a trend line, a support level here at $82.32 per barrel. So support line here, market retests the area a couple of times and is unable to break. And now it sets a precedence for the market to rally, get to 83.9 and perhaps even $84.4 per barrel. So I'll be looking at the questions that you guys may have raised. You can see quite a good number of responses here. Of course, hello, Susan and Said. You can see Anthony Gatia is in the house. So USD to get stronger when Powell speaks tomorrow at the Jackson Hole Symposium. I don't know about that, but the fact that we had inflation jumping higher for the first time in a long time, over 1 year, inflation has been moving down since June last year, and the July reading moved higher, basically indicating that there could be some form of resurgence in inflation. So this means that there's a likelihood that the Fed may continue tightening policy in order to rain down on this inflation and get to the target of 2%. So the Fed has really worked hard to get inflation from a high of 9.1% down to 3.0%. And now the 3.2 spike from 3.0 to 3.2%, it's a major challenge. And this could lead to the Fed perhaps even overreacting and going for another 25 basis point hike, which would make interest rates way higher, create more demand for treasuries run out the dollar, there will be less supply of dollar in the market. And as a result, we could be seeing a very strong dollar. So investors will be following the speech at the Jackson Hole Symposium, looking for hints on whether the Fed will go for a rate hike or whether it will choose to maintain rates at the current level. So if there's a hint of a rate hike, then we expect the dollar to strengthen and stocks to continue tanking downwards. But then if there is a possibility or hints that the Fed is looking to pause rates, then in that case, it could be very bullish for equities, which are basically selling off this afternoon. A very good question. What do you mean when you say buy the rumor, sell the news? So it's a very common tactic, especially for news that are pumped heavily by the media. So if there is a key event that is being pumped heavily by the media, such as NVIDIA earnings, there's a lot of confidence that NVIDIA earnings would, let's say, emerge as very positive, or basically what you call bumper earnings, then investors will tend to buy before the announcement of the news. So in 1 week or 2 weeks before the announcement, they will be buying more and more of those shares. And immediately the earnings are announced, if they come in as expected, then the price of that stock will naturally jump higher. And when it jumps higher, then it creates the opportunity for the people who bought a week before, 2 weeks before, to sell at a profit and gain from that tactic of buying the rumor and selling the news. A very good question. Does the strength of the dollar affect US stocks? Yes, it often does. But what we are seeing this year is a break of that correlation. So this year, we are not having that normal correlation that we have had over the years, where if the dollar is strengthening, the equities are weakening. And if the dollar is weakening, the equities are strengthening. So what we are seeing here is a strong positive correlation between the two, where on one side, if the Fed is tightening, it strengthens the dollar, but then a very stable and resilient US economy is also strengthening equities, led by the AI boom. So we know that fiscal spending has been high, and of course, the Biden administration would not want the stock market to crash when they are going into an election. So they want to maintain those high valuations in equities so that it's favorable for them during the elections next year. So Central Bank of Turkey hiked interest rates by 25 basis points. Are you of the thought that now is the time to go long on lira? Nope. Nobody is buying Turkish bonds. People are buying American bonds because they are the safest and the yields are really high. So it's a once in a generation opportunity to go for a 10-year bond that is paying you 4.28% in the US. So when that happens, I don't think anyone will be considering buying Turkish bonds, which would translate in demand for the Turkish lira. So the fact that they are hiking interest rates, it's similar with what Kenya is doing. So last time we had a 1.5% hike. So from 9% to 10.5% from the newest governor, Kamau. But this did not stop the Kenyan shilling from sliding against the dollar. So I think it's the same thing happening with Turkey. Kindly look at pound USD, 0.25% BPS rate. So it's also important to check the Fed futures tool. So this basically measures the way investors are behaving in the futures market, and it can tell you the probabilities for the same. So following tomorrow's event, I expect there'll be a significant change in the CME FedWatch tool, and this could result in some good volatility. So earlier in the week, on Monday, this probability was 13.5%. So now it's moving higher. It's now at 17.5%, meaning that the chances that the Fed will go for another rate hike on the September meeting are continuously increasing. Last week, it was 9%. So it's almost doubling. So if this probability keeps going higher, then it basically implies that investors are betting on another rate hike. So that's the key takeaway from that. So the last comment I saw was to check on pound USD. And of course, we saw the Burj Khalifa happening here, market going up and then back down, reversing all the way back down. So what we are seeing here with the projection of a stronger dollar is the pound testing a key level of 1.26187. So in the last couple of weeks, this is last week, the previous week we did not have a new low, and then the previous week we had a new low here. So we saw the market forming a double bottom, and then pulling back, trading in a triangle, then retesting this area again before dropping further back downwards and forming a third bottom, which basically implies a triple bottom. And now that the market is going here for the fourth time, it doesn't mean that it's going to break. We don't know that yet. We don't have that information. So what we know now is that the pound USD is basically ranging. So this is a market that is typically ranging or moving sideways. So just to give you a highlight, from this area here to this area, this market is just moving sideways. So this is sideways momentum with oscillations down, up, down, and then up, and then down, up, down. So eventually, we know that the pound USD will break out of this range, and chances are the breakout will be on the lower side, judging from the prevailing trend. So if this breakout happens here, then we could be having a nice swing all the way down to the previous high around this area. And this is around 1.25303. However, this has not happened yet. So you have to be very patient and wait until something happens around this area. So the price action here is what will be dictating the momentum. If there's a breakdown once, then we go for the short selling trade all the way down. So you have to observe this area. The price could also bounce from this area and head back upwards. So we don't know yet. So it's time to basically be patient, observe the price action, and look for the right entry. So as for European equity indices, big sell-off happening today. I think I shared this in the Telegram group, basically telling guys that investors are just realizing that European equity indices don't have NVIDIA. So in this case, you can see after the big rally yesterday and early morning, you can see the big reversal happening, and I expect this to continue towards the end of the week. So even next week, we could be seeing some further downside momentum. That's for the Euro 50. If you look at the French 40, it's the same thing. Market trading all the way up and then reversing immediately with a big candlestick that was indicating a very strong rejection of higher prices. So this is our big rejection here. So for anyone who understands candlesticks, you know what these two candlesticks mean. So then for UK 100, there was some form of resilience, but then a very key signal that the market has rejected higher prices. And from then, we have been seeing the market pulling back downwards. So that's it. Thank you very much, guys. Thank you for your time. Remember to continue watching the newest episodes of the Bullish Banter podcast. There's a lot of content that we have covered, and hopefully you get to benefit from that. Good question. How does bond yields affect the dollar? So if bond yields in the US are high, then it basically represents an investment opportunity where people will be moving their money from risky assets to less risky assets. So bonds are basically generally considered as less risky compared to equities because you're guaranteed that the US will always honor its debts. So if you're running a portfolio, you've made some money and bond yields are high, then there's that inclination to park that money in bonds. So when bond yields are rising, then it basically affects the dollar, where there's more scarcity, and as a result, the dollar strengthens. So as long as you continue seeing bond yields rising, then the dollar will be rising at the same rate. So last question here is Michael Burry shorted the NASDAQ, yet there is an AI boom. Do you think the NASDAQ will remain a long-term bearish move for 2024? So it's not a bearish move, it's basically a market correction. So when investors have made bumper earnings, at some point they take profit. And taking profits basically means selling either a portion of their holdings or everything. And as a result of that, we basically see stock prices taking a step back for a while. It would take a month or a couple of months before we resume the bullish momentum. So good night, Joseph. Thank you, Tony, and I hope to see you guys on the next one. So tomorrow, the market snapshot series continues. It will be hosted by Samson Mzera. So make sure to attend at exactly 11 a.m.